I strongly suspect you'll have gold well above the old highs, the 2070 intraday highs that we made 3 or 4 times, like well up in the 2000s. I think you'll also see silver challenging somewhere between the 25 level where you are now and taking out the highs that we saw in 2020 and 2021 near 30. I think we'll be challenging those levels by the end of this year. Now, get out into next year, 2024, I think could be quite dynamic.
Since May yesterday, gold climbed to its highest level amid US dollar weakness and lower US Treasury yields. Some analysts forecast silver's spot price will stay above the US $25 per ounce threshold throughout 2024, even reaching $30, the highest spot price in almost a decade. Others predict a correction, although it's likely to be minor and temporary. According to the Silver Institute, this deficit will ease in 2023 as new mining projects come online. Last year's deficit was a record high 253 million ounces. This year's projected 199 million ounce gap is smaller, though still significant. MichaelOliver, a seasoned market analyst, brings valuable insights to the ever-evolving world of finance. In this video, MichaelOliver is confident that gold will exceed above $2,070 and silver to surpass $30 by the end of this year. Considering that the world is facing violent conflicts in the Middle East and Ukraine, combined with Waller's words, these facts have taken gold well past the elusive and critical psychological level of $2,000 per ounce. In fact, on a technical basis, there is minor support at today's high of $2,065 based upon a former support level or price bottom that occurred at the end of April. If this resistance is taken out, we would look at $2,080 and $2,100 next. Michael strongly believes that the monetary metals market, especially gold and silver, is entering a new bull phase, triggering a sustained momentum launch phase. Investors have been positioning for a pivot in monetary policy, with investors' net long positions on gold hitting their highest levels in 4 months, according to the latest CFTC data. Now, we present the clips of MichaelOliver's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
We think that the bull market that's been underway in monetary metals, especially gold, which began in December of 2015, that was the low. Gold was $1,050, thereabouts. And it doubled over the next 8 years. If you go back and look at the history of gold bull markets, like from 1970 to 1980, when it went from 30-something to 850, and then you go from 250 in the year 2000, 2001, you went to 1920, took you, 10, 11 years. We're now 8 years old. So this is not a new bull market. There have been enough sell-offs en route to where we are now to make people think, it's not a bull market anymore. No, it wasn't. It's just a massive congestion zone that has been in place for the last 3 years. Gold keeps going up over 2,000. They sell it off, 2,000, sell it off, et cetera. The game is played over and over as if it's some kind of top. It's not. We've argued it's merely a massive congestion zone at all-time highs, meaning above 2,000, just keeps coming back. We think it's ready to launch now for a more dynamic phase of the bull market. And by that, I mean where gold and silver and the mining stocks take such leadership among assets in the world that you could invest in, that it takes your breath away. And yes, even the laggards of silver and the miners are going to catch up now to gold. In fact, we think silver has just now in the last few days, on a relative performance basis, meaning a spread chart where you measure silver versus gold, has broken out in relation to gold. So not only are both metals driving north, but silver is now likely to drive north at a more rapid pace. And if you go back and look at the bull market in 1970 through 1980 and 2000 to 2011, you'll see that in the last year of the aged bull markets, and they weren't the same number of years. One was about 9 or 10, the other was 10 to 11 years. We're now 8 plus going into our 9th year. Not that it has to go 10 or 11, but we think we're entering the phase where back then, for example, in the 1979, 1 year before you hit your peak in 1980, and also between 2010 and 11, in the last year or so of that bull market, you went ballistic. In other words, it was no longer an incremental fist fight all the way up. The angle of incline had been like this. Now it's going to be more like this. And I think that's where we are on the map. And I think we're now beginning it. What we would like to see for this month's close? Well, we have some final numbers that we'd like to see triggered, but frankly, we've got enough momentum-based trigger numbers already full green light that these last numbers we consider them secondary. But if you can close silver out this month, meaning a couple days from now, and we're using December silver right now, above 25.13, that will close above the three prior peak closes of the last 2 years, which each have been either side of 25, talking monthly closes now. There have been three peak closes, not back in 2021, it was up near 30. But since then, there have been three peak closes, monthly closes, either side of $25. If you close above those three, then the price guys are going to say, oh my gosh, this is for real. They'll wake up finally. Gold. We have a number, a momentum-based number, that if you close out this month, meaning in 2 days using December gold, around 2025, right now we're 2040, expect the launch phase. Okay, and I think we're there. I think we're going to get the launch phase, meaning that what you've seen over the last 8 years of advance in gold, the layered advance with huge up moves and nasty sell-offs along the way, is over. We now go more vertical. And that's the phase that I think also other markets get impacted the other way.
MichaelOliver predicts a swift increase in silver prices, quickly reaching around $50 per ounce in the next couple of quarters. Silver investors often get frustrated when they see that the price of silver can remain stagnant, even when gold is on the rise. However, this has been a regular pattern with silver and gold spot prices throughout history. Silver tends to follow behind gold during periods of market growth. But eventually, silver catches up and even surpasses gold in terms of price performance. He mentions an increased strength in significant gold companies, signaling a potential shift as asset managers recognize the value in gold amid anticipated Federal Reserve policy changes. Gold climbed for a fourth consecutive session, hitting a 6-month high at $2,045 per ounce, driven by a weakening dollar and the belief that the U.S. Federal Reserve has paused interest rate hikes. Fed policymakers lean toward maintaining rates for the year, adopting a wait-and-see stance before contemplating cuts. Let's get back to the interview.
If you round it off to a $50 increment and keep a point and figure chart, where every $50 is an uptick or downtick, et cetera. The high in 2020 was 2050. Yeah, it got up to 2070. Okay, but 2050 top $50 tick. Then you pull back up to 2050 again. You've been up, that was in 2022, March of 2022. Then early this year, back to 2050 again, intraday on a high level. We're now back within $9, I think, of hitting 2050 for the fourth time. So if you ever go through there and print a 2100 price, then if you're a point and figure chartist and that's your belief structure, is you go through that and hit 2100. That's a quadruple top breakout. Now, it's our experience, if you go back and look at the 50-year history of gold since it was legalized, gold has never even double topped. In other words, if it ever goes back to its bull market peak, or what you thought was its bull market peak, that wasn't its peak. Every time gold is topped, it has never gone back to its high again. 1980 peak at 850, it melted. The 2011 peak was over 1900. You tried repeatedly during the year 2012 to get back up to 19. You couldn't even get back to 1800. This time around, since 2020, we've gotten up to over to 2050 three different times. Now we're about to do it a fourth time. So even from a price chart perspective, this is different. My expectation is that the $30 highs we made in 2020, 2021 on silver will be gone very quickly. And then silver will be on a very rapid move to challenge its prior two peaks of the last 50 years that were on either side of $50 an ounce. And I think getting from here to there will be faster than most people can imagine. I'm not going to say it's 2 months or 6 months, but it wouldn't shock me that's an event where you get close to the $50 level. And again, I don't think that's going to stop you this time, but just getting to there might be an event over the next couple of quarters. I think if you watch, for instance, Newmont and Barrick Gold, the two big blue chips, okay, they constitute, I think, about 17% of the GDX ETF. They've been laggards recently, but all of a sudden they're getting a backbone. And I think that's evidence that large non-gold bug asset managers that are managing billions of dollars in fund assets are deciding that, hey, one, this category is very cheap. Two, gold is at the all-time highs. Find me an asset in the world that's constantly crowding its all-time highs. You can't find one, okay? Gold is. Why is gold doing that? Well, some of these asset managers aren't dumb. They know why. They know the Fed is going to have to alter its policy, and gold knows that and has known that for the past couple of years. That when the bubble breaks that the Fed created between 2009 and 2021, that ultimately they're going to have to go monetary easy again in a big time, and the chief beneficiary will be monetary metals. And so I think you're seeing large asset managers move assets over into the large blue chip gold miners, for example. Over the last week or so, you'll see a dynamic move out of those miners, talking 15% type up moves. And I think that's evidence of an asset class shift. And of course, you got to remember the gold mining sector is a tiny little sector. And so even if a small percentage of what we call normal asset allocation gets moved over to that sector, it's like grabbing a wet bar of soap.
In conclusion, the overall trend for silver is bullish, especially if it maintains above the pivot point of $24.29. In the short term, the market may see silver testing and potentially breaking through the immediate resistance levels. Gold tests new highs as traders focus on the weakness of the US dollar, which has recently moved to multi-month lows against a broad basket of currencies. What are your thoughts on the factors influencing the current surge in precious metals? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.